Welcome to the Deep Dive. Today we're going to tackle something you've probably heard about, maybe even feel a bit confused by. Bitcoin.
Yeah, it's everywhere, isn't it?
Totally. You could think of it like digital gold, maybe, or just a totally new kind of internet money.
And look, if it feels overwhelming, you're definitely not alone. You hear all these terms: blockchain, crypto, prices swinging wildly.
Right.
So our goal here really is to just cut through that noise, give you a solid basic understanding of what Bitcoin actually is. We're going to lean on some ideas from Raoul Pal from his Diary of a CEO chat.
Yeah, Raoul's perspective is interesting. He kind of suggests that our usual way of thinking about money, about savings, well, maybe it's not as rock solid as we assume. He talks about, currency debasement, how the value of, say, your dollars or pounds can just shrink over time.
Yeah, inflation eating away at it.
Exactly. And he positions Bitcoin as like a potential opportunity in that whole changing picture.
Yeah.
Especially, he notes, for younger generations maybe facing, tougher economic climbs, harder to buy houses, build wealth like your parents did.
Right. So the mission for the next, let's say, 10 minutes or so is pretty straightforward.
Yeah.
Get you, even if you're totally new to this, up to speed on the fundamentals. What is Bitcoin? Why should you maybe care? And we'll try really hard to skip the super technical jargon.
Okay, let's do it. Let's dive in. So Bitcoin, at its core, it's a decentralized digital currency. But what does decentralized actually mean here? Like, why is that important?
That's the absolute key difference. It means there's no single boss, no bank, no government controlling it, issuing it, or keeping the main records.
No central HQ.
Precisely. Totally different from the money in your bank account right now.
Okay, so if there's no bank, how do we keep track? How do we know who owns what, and how do we stop people from cheating the system? That's the blockchain part, isn't it?
Exactly. You got it. So imagine the blockchain is like a giant shared digital spreadsheet, or maybe a digital record book.
Okay.
Everyone on the Bitcoin network has a copy, and it's constantly updated with every single transaction.
A shared record book.
Yeah.
So, but if everyone has it, couldn't someone just go in and change their balance, add a few zeros?
Well, that's where the cleverness comes in. See, everyone can look at it. That's the transparent part. But once a transaction is confirmed and added to this chain of records, it's basically locked in. It becomes incredibly difficult. Some would say practically impossible to change or delete it. Immutable?
Immutable, okay.
And because this ledger isn't just in one place, but copied across thousands of computers worldwide, no single person or group can secretly alter it or shut it down.
So how does a new transaction get approved? How does it get added to this shared book? Is that the mining people talk about?
That's it, yeah. Without getting lost in the weeds, basically a whole network of computers competes to verify batches of new transactions. They solve a complex puzzle, essentially. Yeah, a computational puzzle. When they solve it, they get to add the next block of transactions to the chain, hence blockchain. And the whole network sort of agrees, yep, these look legit. It's called consensus.
Okay.
The main takeaway is this process creates trust and security without needing a bank or payment processor in the middle. It's the network itself that verifies everything.
Right, replaces the middleman with math and distributed agreement.
Yeah.
Okay, I think I'm starting to see it. How does this contrast with my regular bank account? Raoul Pal had that suitcase analogy.
He did, yeah. It's a helpful one. He said, imagine your bank is like a suitcase. You put your money in maybe a physical coin. The bank gives you an IOU, right? A line on your statement saying you have that money. But as Raoul points out, you don't really possess that digital number in the same way you possess a coin in your hand. Banks use what's called fractional reserve banking. They only keep a small fraction of deposits on hand and lend out the rest.
Right, I've heard of that.
Yeah.
So if everyone rushed to the bank.
Exactly. They wouldn't have enough physical cash for everyone. And Raoul also mentioned the slightly scary idea of a bail-in. We saw that in Europe.
Bail-in, not bail-out.
No, bail-in. If a bank is failing, in really extreme cases, they could potentially use depositors' money, your money, to help save the bank.
Wow, okay. That definitely challenges the idea of banks being totally safe.
It does put a finer point on it. The money isn't just sitting there with your name on it in a vault, generally.
So how does Bitcoin's decentralized setup help with that kind of risk?
Well, it relates to this classic problem in computer science called the Byzantine generals problem. Basically, how do you get a group to agree on a plan if you can't be sure everyone is honest or can communicate reliably?
Okay. Sounds complicated.
It is, but blockchain offers a solution. Because everyone has to reach this consensus, this agreement about transactions before they're recorded, it makes it super hard for bad actors to cheat or for one single failure to mess everything up. Raoul called it a security truth machine. Trust comes from the network's agreement, not from a single institution.
A security truth machine. I like that. Yeah. So, okay, if I own Bitcoin, what does that actually mean? Is it like a file on my computer?
Not quite. Owning Bitcoin means you control a set of digital keys. Think of them like a secret password, a private key that proves you own the Bitcoin associated with a public address on the blockchain.
Keys, right.
Holding these keys gives you direct control. It's different from a bank where you really just have a claim against the bank for your funds.
And Raoul mentioned keeping these keys safe. Something about a ledger device. What was that about?
Ah, yeah, he means a hardware wallet. Often people just call them ledgers, which is a popular brand. It's like a little USB stick, basically.
Okay.
It stores your private keys completely offline, away from internet hackers. And it's usually protected by a PIN, plus this really important thing called a seed phrase.
Seed phrase.
Yeah, like 12 or 24 random words. That's your master backup. If you lose the device, those words let you recover your Bitcoin. This idea of holding your own keys, self-custody, gives you ultimate control, but also, responsibility. No bank to call if you lose your keys and your seed phrase.
Right, more control, more personal responsibility.
Got it. Okay, practical question. How does someone actually, buy some Bitcoin? Where do you start?
For most beginners, the easiest route is probably signing up with a crypto exchange. Places like Coinbase, Kraken, Crypto.com are common ones.
Okay.
They let you link a bank account or card and buy Bitcoin, sell it, often store it too, although self-custody is generally seen as safer for larger amounts long-term.
And some regular places are getting involved too.
Yeah. Raoul mentioned some traditional banking apps. Even PayPal in some regions now offer ways to buy and hold Bitcoin. His advice was really just start somewhere small, get your feet wet, see how it works. Makes sense. Learn by doing, even a little bit. Now, let's talk about the investment side. Raoul had some pretty bold things to say about returns compared to stocks or real estate.
He certainly did. His argument was that for many people, especially younger folks looking for significant growth, traditional assets like the S&P 500 or property might not cut it anymore.
Not enough potential.
Potentially not the same level of potential we saw in past decades, yeah. He pointed to Bitcoin's track record, acknowledging it's relatively short, showing what he called stupidly high returns, something like 145% average annual return since 2011, even with the massive crashes factored in.
Wow, 145% a year average.
Oh.
That is attention-grabbing.
It definitely is. And he framed it as a way for maybe the average person, even starting small, to potentially participate in wealth creation that feels harder to access through traditional routes now.
And this is a big but, right? He was also crystal clear about the volatility.
No crashes.
Oh, absolutely. The crucial point, yes. He explicitly warned about huge drops. 70%, even 80% drawdowns have happened.
Yeah. So his advice, and it's advice echoed by many in the space, is critical. Only invest money you can genuinely afford to lose. Or, perhaps better put, money you're comfortable seeing potentially drop dramatically in value without panicking. It demands a long-term view.
Right. Not for the faint of heart, and definitely not your emergency fund.
Yeah.
Okay. One last core concept he mentioned, digital scarcity. What's that about?
So unlike traditional currencies like dollars or euros, where central banks can basically create more whenever they decide to.
Quantitative easing and all that.
Exactly. Bitcoin has a hard cap. There will only ever be 21 million Bitcoin created. Ever. It's built into the code.
Only 21 million. Okay.
This creates genuine digital scarcity. Like gold, there's a finite amount. Raoul contrasted this directly with fiat currency debasement, the idea that as more money is printed, the purchasing power of each individual unit tends to go down over time. Bitcoin's fixed supply is seen by proponents as a potential protection against that.
A hedge against inflation, potentially, because they can't just make more of it.
That's the core idea.
All right, let's try and quickly recap then for someone listening.
Right.
Bitcoin. It's digital money, decentralized, no single boss. It runs on this transparent, secure public ledger called the blockchain.
Right, yeah.
Owning it means controlling digital keys. You could buy it on crypto exchanges, maybe some other apps now. It had historically high returns, but big warning, it's incredibly volatile. And a key feature is its fixed supply, its digital scarcity. How's that?
That's a really solid summary of the basics we covered. Nice.
Cool. So wrapping up this quick introduction, It definitely feels like Bitcoin offers a different way to think about money, about value, especially in our super digital world.
It really does. And it's just the tip of the iceberg, as Raoul also hinted. There's a whole universe beyond Bitcoin itself, things like smart contracts, other blockchains like Ethereum or Solana. They're exploring uses for this tech in gaming, finance, supply chains, all sorts of areas. It's not just about currency.
So much more to learn. If someone's listening to this, maybe feeling intrigued but still a bit cautious, what's your main piece of advice?
Honestly, just keep learning. Don't feel rushed to buy anything. Focus on understanding. Maybe, as a next step, dig into that idea where I'll mention currency debasement. Think about what that means for your own savings, your financial future. Does Bitcoin offer a potential answer? That's the question to explore.
Good advice. And maybe a final thought to leave everyone with. We live in an increasingly digital world, right? And there's definitely economic uncertainty around. Could understanding these new decentralized technologies like Bitcoin actually become, I don't know, a key part of being financially literate and maybe even empowered going forward? Something to chew on.
Definitely something to think about.
Thanks for joining us for this deep dive.